Hey everyone, welcome to another edition of the Monday Market Update. I know you don't see Sean on here. Don't be alarmed. He is just on the way to Philly. We did not, you know, remove him from his host role here. That obviously this introduction is so botched. You understand why he's on this video anyway. So I got Rob Pieklo here as my guest. Appreciate you joining on, Rob. It's looking like another great, week to kind of originate loans here, and we got a big week ahead of us, and really not too much data. So let's kind of jump right into it. Did you want to talk on anything real quick, or should I just dive into kind of the week
No,
ahead?
very happy to be here again and love jumping in. Less neon lights and mood lighting here. No purple hue in the background like you get with Sean. So, there's a big week. A lot of stuff happened last week. We had some ups, we had some downs, and we ended trending, on the trend line, which is going up. Hopefully, we're stuck in this little bit of a range, but looks like a little bit of green today, going into a week of not too much until obviously towards the end of the week when we have some data points coming out. But go ahead.
Yeah. So one thing I reviewed before we hopped on here was, when are jobs reports going to be released, and that's like the big thing that we have, right? So it looks like we actually, I guess, since we don't have a big enough week here this week, we don't have jobs report come out until March 10th, is what I'm seeing. So not a huge amount of data this week, but we do have, a couple Fed speakers. We just, have some, pending home sales, all that good stuff that kind of just supplements the overall, economic health. We have, the Case-Shiller update coming out here in Tuesday, and really, I think generally, this is a market that's been repricing all over the place. Like you said, trend line moving up, kind of seeing where we have resistance levels, right? And kind of what is priced into the market is kind of exactly what all the market's been thinking about, right? So the federal funds rate, when we're kind of talking early in January, we thought was it one, maybe two hikes. Now we are fully priced in for, we had the one hike already, but we have a hike coming in March, May, June after that. That's all been priced in at 25 bips a pop. But, beyond that is kind of where we still have some gray area. And if there's anything improving from that, I think it's yet to be seen. But overall, I think it's a lot of, how high and how long is still the question at the end of the day.
Without data points, it's always a scare because you see those momentum traits build, right? Usually they're building towards an event or towards some additional data points. So this will be a lot of the Fed speak is going to be, a big indicator of what happens in the market this week. We have a lot of people questioning, the coupons and how much people are going to pay for this next level in coupon, and we're seeing that from a standpoint in your pricing. You're seeing it in sometimes when markets move like this, we have a little bit of a bump up. There's an adjustment period for that next level of coupons to come into play. Somebody has to dip their toe into the water and kind of set pricing. And we saw this a few months back when people kind of moved up their rate stack even into the low eights, but without a real active, a liquid market in those coupons. So we're going to see what happens this week, but we just need all originators to kind of pay attention to rate stacks, open up those rate stacks, look where these things are pricing, and effectively also, everybody should be looking at margins and their compensation as well in terms of a structure to make sure that they're pricing in their geographical market like really competitive, because this is really going to showcase our pricing versus some of the retail branches that are out there right now. That traditional distributed retail model, it's going to be hard to achieve those margins. And since we're on that lower end of the spectrum, we're really going to stand out with our originators.
No question about that, Rob. I think that's 100% right. And I think where we also saw, retail get hit pretty hard is when they did have that, huge jump in rates, and we're approaching the 8.125. Is at the end of the day, everyone has to play in the same ballpark of passing QM, and everything that has to go along with that. I mean, no one's kind of exempt from having to go through those compliance tests, and their margins that are very beefy. I think that's where they have to take a look in the mirror too. At the end of the day.
Exactly. Pricing is going to take a little bit of a hit. You're going to see lenders are going to clamor a little bit and probably reduce margins and get super aggressive. And it's not just for them to get more volume in; it's to be able to pass these tests, especially on the broker side as well. If you're going the traditional broker route, there's some tests that are going to be done and things that are needed in order to pass those tests. So you'll see that. the inflated branch margins, you're going to see lots of points out on the street. So where you're going to be comparing and looking at loan estimates, like if a borrower says, oh, I got offered, 6.875, they need to look at the full section A of that loan estimate and see exactly what's being charged in that amount, because we're going to see, just like we did a few months ago, you're going to see those rates are going to be there, but there's going to be a significant amount of points being charged on a lot of those loans, just because premiums have evaporated right now until this kind of next level of coupon goes. And even when those next level of rates go up, those retail folks aren't going to be able to get to par, even because there's usually like a 1-for-1 as you go up in interest rate for price, and you'll see that. And when that occurs in the higher stack, you're just not able to achieve those beefy margins that they're going to try and get.
No question. And I think at the end of the day, we're going to hope for lack of volatility, some moderation in the market. We really need that in the space of the mortgage-backed security market. It's a market that does not operate well with immense volatility, and so we will, really hope to have a steady talk here this week from the Fed, get some clarity, because I think one thing that we want to talk about too is the market's still digesting the Fed minutes a little bit, I think, which was one thing that got released last week that helped provide some clarity in terms of, who's the person we should take a grain of salt from. So I think where we see some people like Bullard from the St. Louis Fed, they are kind of really, really hawkish. I think majority is not that, extreme in terms of seeing 50 bips again. So as long as we can kind of get some consistent talk from the market, I think we should see some steady eddy, a little bit less volatility. But at the end of the day, like you said, Rob, this is not going to bring us a lot of premium here until we actually have like a moderation over a couple months, or a little bit of a retraction in rates as well. So I think this is something that, what Rob is saying is very important. We have to look at the rate stacks. We have to get in the habit of that. That needs to be our new normal. And at the end of the day, until things really drastically change, par isn't really what we should be hunting. It should be, value for the rate. Or can we beat retail at 6.25 or, something along those lines? Like, look at those box A's together and that cash to close. I think that's really going to be the way to sell and win.
Yeah, I think most originators do a great job of calculating where, whether a discount point makes sense. And you're going to see some incredible value out there when you open up the stack, but you have to open it up. That's the key part. Certain interest rates are going to be slotting into different coupons. There's MSR values. There's, how they dictate what the par coupon is and how the servicing rights value go up and down. There's a lot of things going into pricing. You don't need to know all that from an origination standpoint or from a consumer standpoint. All you need to do is open up the stack and look. There's a lot of times I had a scenario just on Friday where it was only about 60 basis points of discount moved the rate 50 basis points. So, for that and having a sub 2-year recoupment period, it was a no-brainer for us. But these are the things we have to look at. It's not just solely get to par. You have to look at value, like you had mentioned, and there's incredible value in certain spots. On the government side, the same thing. Look at those quarters, those 6.25, 6.75 in that range, or even the 5.75s. Just take a look at those note rates in particular. Those are the ones that have optionality in the coupon and servicing value. Those are the ones you could find. Some lenders are getting super aggressive, and it's great to have them in our portfolio of lending partners. And you look at them and just see where you can find that value for our consumers.
No question. Well, and the goal of keeping it short, is anything else you want to touch on? Do you want to go into MSR fixed income math, or should we just leave that for next week?
We can save that. We need like a big whiteboard and we go into that. But I will say that the lenders that are out there and those folks that have this significant amount of MSRs out there, that market is moving and shaking with these rate moves as well. There's I think of it just a couple weeks ago, right? We were on this other trend line, like we're heading towards a recession. We're looking, rates are moving down. Everybody's very comfortable, and then boom, boom, boom. 3 data sets came out, reversal. This is the same thing that's happening both in our pricing market and in the MSR pricing market. So, there's some things that are moving and shaking. It's just we have to understand that this market, it's things can flip on a dime, and we can be heading back down quickly as well, or moving up one leg or two, over the next few weeks, depending on what these data points come out at. And it's just, like I said, 2 weeks ago, talking about it. We just thought this thing's going to continue to go down. We were sniffing the fives on a lot of loans, and then boom, it's a reversal back up to near 7. So these things can change so quickly with these data points that are coming out. So we'll see what happens over the next 10 12 days, but it's going to be interesting. I know that the key part that we have to keep focusing on, rates are moving, rates are, these things have gone up a little bit. We're still in a really, really good spot for UMortgage as a company. In a competitive analysis, it's still going to look really good. These dollars are an incredible amount of savings or an incredible amount of more buying power based on how we price our loans. So I'm very excited for that portion of it, because when this comes out, when things like this happen, it's better for a company like us at the margin levels that we run, and as efficient as we run. It's really, really good, because we tend to stand out amongst the crowd. When things start to move down the other way, we're still really, it looks great, but maybe it's only an eighth or a quarter in rate and then some fees. Here, you're going to see significant difference in fees for that same interest rate. So it's really, really important to compare those things, and we're going to be in a really good spot going forward.
No question about it. I think that's absolutely fantastic. I don't have anything yet further to add. I think where you left it off there is great.
You're not even going to mention that I'm bringing cheesesteaks tomorrow to Philly. You're not even going to mention your team's going to get fed for my lost bet. I thought you were going to mention that a little bit.
I think that's right. I didn't want to. I mean, Rob is about 30 DPD right here, so we're gonna have to get him on the RPL market. So he's delinquent slightly, but we'll cure that.
We are running a little
Tuesday.
bit behind. All right, I'm going to catch up and get you guys cheesesteaks, I promise. But it'll be easy to spot me. You can always tell the Florida guy in Philadelphia with all you guys, and I'm going to be like this tan red guy that's walking around, so you'll know that I'm from Florida. And I'll be very cold, so I don't even have a winter jacket. But I'm excited to fly up there tomorrow morning and spend some time with the team.
And you can tell you almost got the golf tan like right now. I think you look like a handicap, like a scratch golfer right now.
Well, since coming here, I've gone from near scratch to about a 5 or 6. So it's on its way. I'm trending up on that for lack of play.
That's right. That's right. All right. Well, it's great talking, Rob. Thanks so much for hopping on and filling in for Sean. We'll obviously be great to have all you guys here in Philly, and we'll pick this up next week. Have a great rest of your week, everyone.
Awesome. Thanks, guys.
Thank you.